It is once again the end of the financial year, and that means after working for 12 months straight, the taxman comes knocking asking for some more money. Today, what we're going to be doing is finding out how we as individuals can reduce our tax and possibly even get some money back from the tax department instead in the form of a refund. Let's take a look. How's it going, guys? Ryan here and welcome back to another video. Today we are talking about reducing your tax at the end of the financial year. Now, it's quite timely given that the FY 22-23 financial year has just come to an end, but that also means the taxman is asking for some money. So what we're going to be talking about today is tax deductions and what are some of the potential things that you can present to your accountant. Now, by all means, I'm not a financial accredited professional. I'm not an accountant. So make sure the golden rule you follow when taking any information from this video is take what you believe is a tax deduction to your accountant and they can give you professional advice. But today what I'm going to be sharing with you is some of the things that I consider every single year when looking at my tax return in order to get the maximum benefit possible. Hopefully reducing my tax to a point where it's the tax office who actually owes me money. So without further ado, let's jump right in. So for most people out there, you work a standard sort of job, whether that be a 9-to-5 job or whether that be as a tradesman or something relatively similar to that. But that means you have the opportunity to actually claim some money back from the tax department for any direct expenses that you outlay as a result of that job, which isn't reimbursed by the company that you work for. So for example, if you work from home and you need to buy a new screen, a new computer, whether that be a laptop or the actual build itself, a mouse, a keyboard, headphones, anything like that, these can be claimed as tax deductions if they've been bought with the intention to use them directly for work. Now, as a YouTuber, for example, I can claim things such as the camera I'm filming on, the microphone that I'm speaking into, applications that I use on the computer, such as software for recording purposes, or for my trading purposes and that sort of thing that I share some of my videos on. These are all counted as tax deductions. If you were a tradesman, for example, the tools and other sorts of bits of equipment that you purchase could also possibly be used as tax deductions, as well as it is a direct expense that you incur that is not likely to be reimbursed by the company that you are working for. It's also worth noting that if you do anything external such as professional development that is related directly to your job and is of a benefit to you, that can also be put forward as a possible tax deduction as well. The second thing you want to look at is charitable donations. So if you've made any donations throughout the year, make sure you hold onto the receipt for those donations because they can be lodged as a tax deduction as well. This is a great way to actually allocate money to a charity of your choice instead of actually owing money to the tax department. As a result, instead of them taking it from you, you're basically able to decide where it goes. Now, continue to accumulate these types of receipts throughout the year. If you do make any donations, record the amounts and that sort of thing and where they go to as well. But if you put money into something like the Mega Home Lottery, which is for charity, MSWA, that is not a tax deduction because you've put your money into something which is going to possibly result in a prize and a return. So that sort of charity does not really count when it comes to actually getting into a tax return or something like that. But if you directly donated to MSWA, then that would be a different situation and you would be able to claim an expense of that type. Now, the third thing I want to talk about is usage of different things for work purposes. So not the actual physical buying of it, but instead using your personal equipment in order to perform your job. So a good example of this would be you claiming that some of the time on your mobile device is used for work purposes, or you may buy an entirely new SIM in order to purely deal with work things. These are a possible expense that you could claim through your accountant to tax. Alternatively, if you're using fuel in a personal vehicle to run deliveries, for example, for a company or any other sorts of things like that, whether you're a salesperson going around to different locations, or you have anything like electricity out of your house that is a home office, these are things that you can present, and if you have a legitimate reason, the tax office will allow you to actually claim back money as a result of these things. Now, as this is a stock related channel, of course, I want to have a look at where you can make a bit of money back from your stocks as well. And the most important one that you need to focus on is offsetting your losses. So for instance, if you lost $10,000 on a stock and you made $20,000 on another stock, that means you've only made a $10,000 profit and you'll only be taxed on that $10,000 amount. So make sure that you are utilizing your losses to offset your profits, as it will allow you to reduce your tax levels for what you do owe over time. Now, it's very important that you do keep records of these sorts of things. Keep the little piece of paper that you receive from your broker every time that you make a buy or a sell transaction. But what's even more important is that these losses roll over. So if I made a $10,000 loss last year, I made then a $5,000 profit last year on a separate stock, I've still got negative $5,000. This rolls over to the following financial year, and any profits that I make can be offset with that $5,000 that I still have lost, meaning if I make another $5,000, I will owe no tax on that profit whatsoever, as it brings me back to square one of being even. Finally, for those of you who have rental properties or other investments of the sort, you can claim depreciation on any of the investments that you make into the properties themselves. So for instance, if you renovate the entire kitchen and you spend $100,000 on it, this value of the kitchen will depreciate over time, and you can claim tax back on the depreciated value of this over the following few years as a result. A great way to make a little bit of money back. Of course, as well, you putting an expense in could be a possible tax offset, so make sure you talk to your accountant about that. Now, if I could give you one tip, that would be to keep records of absolutely everything that you do, which you believe could be a tax return related activity. This means keep transaction history when you're trading stocks, keep your receipts when you're buying items that could be expenses directly related to your work, keep a log of the amount of kilometers that you travel in your vehicle for work related activities as well. These sort of things need to be justified when they are lodged with the tax office. But of course, the easiest way is to just speak to your accountant and get a professional recommendation on what you can and can't claim, and the best ways in order to track this for your personal situation. Now, that wraps up today's video, guys. I hope you do enjoy it, and I hope that you did get some value out of it as well. If you did enjoy it, make sure you leave a thumbs up, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.